Good afternoon, everyone. Good afternoon. How is the Josh? Only, I think, I heard two people. How is the Josh? How is the Josh? चलो इससे ज़्यादा हाई अब नहीं हो सकता. So, I think since morning we are discussing about startup. So, let's keep our session little bit interactive so that no one sleeps, everyone is awake. So when we take the word startup, so वो क्या word है जो सबसे पहले mind में आता है? Anyone would like to answer when I say startup? New idea, perfect. That's it. New venture. Innovative thinking. Sorry? Yes. Loss making company. Okay. Youth, creative ideas, yes. Okay, so little bit linking with what he has said. Loss making companies. When I was an intern, when I'm looking at the balance sheet, the most important things which I generally look is profitability. What is my top line, middle line, and what is the bottom line? But when I look at the startups, they are not at all concerned with bottom line, top line, or middle line. Loss-making companies are highly valued in today's world. Is it true or false? True. Does this go with our maths when we studied about chartered accountancy? Initially, it didn't go with me. How can a loss-making company be so valued? Okay. So the today's theme is about startup valuation. A loss-making company is having a huge valuation, whereas a profit-making company is not able to do a, you can say, again a valuation. Recently, there is a meme or a video of Ashnir Grover. Has anyone seen about it? Before the Lenskart IPO. So he was just acting as an investment banker. He has two companies. One is a tech company who is into losses, and another is a traditional company who is into profit. So he's like, I will give weightage to the loss-making companies because he has tech. He will not give weightage to traditional company who is earning profits. So it was a meme, but today I would like to relate that with my session. And I would like to thank WRC Saurabh for calling me here and to give this crucial, or I will say little bit secret kind of topic, startup valuation. There are three themes associated with it: science, strategy, and storytelling. So when I say science, strategy, and storytelling, are these three different pillars or they are one? Again, yes or no? Different. Are they interconnected or totally disconnected? Connected or disconnected? Connected. Okay, great. We as a chartered accountants are always good in numbers. Numbers are our tips. Correct or wrong? We would like to play with numbers. We are mastered in Excel. We are Excel ninjas. We are Excel warriors. Correct? Whatever you tell us, we will do it in Excel. We can show anything on Excel. Now, there is another set of people who are called as narrative people, storytellers, who believe that number people are not the one who can do the valuation, whereas we chartered accountants believe that we are the number crunchers, we are the one who understand the numbers, no one can do valuation better than us. So we have two type of people. One is storyteller and second is number crunchers. So I've just defined it in a simple way. Number people believes that valuation should be about numbers, narrative stories are distractions and that bring irrationalities into investing. Whereas storyteller people, narrative people believe that valuation and investing is really about great stories. And it is the height of hubris to try to estimate numbers when you face uncertainty. So narrative people says, when the future is uncertain, you don't know what is going to happen in future. How will you estimate numbers? How number people can estimate numbers? Then you can't do valuation. So there is a two type of people, storyteller and number crunchers. So I would like to see how many of us are number crunchers. I myself is a number cruncher. Okay, very few. And how many of us are storytellers? Good. And rest? Both or none? Great. So I think I don't need to go beyond this slide because we all are storyteller as well as narrators, and that is a perfect quality for a valuation exercise. So should I go ahead or not? Yes. Okay. So there is I think what we are saying that we know both, but I have to go take it further. Okay. Taking the practical case study here, how numbers, science, strategy and storytelling are interlinked and how it impacts valuation. Okay, let's start with the numbers. This is Axis Bank Q4 financial year 20 results. It was declared on 28th of April 2020. So two things I would like to focus. One, in previous year quarter, same quarter, it was into profit. The current year shows big loss. Yearly drop of yearly profit, there is a drastic drop. There is huge increase in the provisions. 185% increase in the provisions, which is like in banking center, NPA is the most crucial thing, and there is a huge spike. So on 28th April, when this result came, what people will think? Axis Bank has made a loss. This is the numbers. These are the numbers audited, officially declared by Axis Bank people. So any idea what will happen? Ultimately, I am trying to link it with the valuation. After looking at this loss-making results, what do you think? So let's see what was happening in public market. Okay. ET Prime, Economic Times, Axis Bank Q4 result, net losses, this and this, provisions more than double. Negative news. Money control. Axis Bank suffers loss, but asset quality better, takeaways from Q4 financial year 20 scorecard. I have two sets of narratives here. One, it's like totally negative narrative. Second, yeah, it's a loss, but asset quality is better. After looking at these two type of narratives, what do you think, how it is going to impact share price of Axis Bank? One, on 20th April, it is just a plain numbers. On later date, we have some numbers. So what is your conclusion till now, after looking at these two slides? Will the stock price will crash, will jump, will maintain? Because it is an unrealistic result, because if you see the analyst report, they were expecting profit of around 1800 crores. Instead of that, there is a loss of 1388 crores. So let's say something, jump in the stock price or crash? Maintain. Jump. Okay. Now this is the perception made in the public. Let's see what management has said. What is the story? What is the strategy used by the management? This is their, again, official press release by Axis Bank. What they have said? Growth in deposits continue to drive loan growth, strong operating performance, well capitalized, retail book is well diversified, strong relationship, asset quality. In their narrative, in their strategy, nothing is mentioned about high provisioning. Only thing they have said, NPA, BB, look, loan will decline from this and this. All the narratives, all the storytelling is on the positive side. So finally, this is the stock movement in the stock market. Ideally, if I just see the numbers, it should have been crashed because it is not up to the expectation. But if I see the forward-looking statement from the management, if I see what press release has mentioned about the company, they are going to do better. The worst part is over. They have made extra provisioning. Now good things are lying ahead. अच्छे दिन आने वाले हैं. Because of that, if you see, the movement is plus minus, but it is almost stable. No negative impact. So the conclusion which I wanted to draw here is, valuation is all about science, how you value. Science is a kind of thing I will explain later. Strategy and storytelling. It is a combination of all these three things. These all are the pillars of valuation. They all are connected. So let's take an example, another example. Yesterday's Bihar election result. So everyone, I think, was predicting that it could be a hung assembly, I think, or BJP will or NDA will not have that majority. Is it the common opinion or difference in opinion? Okay, but has anyone imagined 200 plus seats? Sorry, sir? Okay, so one of the valuer has done that job perfectly, others could not reach to that point. So what has happened? Why? Why people of Bihar has voted for NDA? So if I think about it, there could be two major reasons. One, historical performance, what they have done. Second, the performance which they are going to deliver in future. The promises which they have made, and based on historical performance, they are going to, people are, I think, convinced that yes, what they are saying, they will deliver. That's why they have got this majority. So in the valuation also, same thing goes. Numbers, storytelling are the important part of any valuation. And strategy links science, which is numbers, data driven, and strategy link the storytelling part. Because when you stand up any storyteller and they will go into any fairy tales, ऐसा होगा वैसा होगा, we will jump with 1,000 crores, we will do revenue of 500. You meet any founder, they are so confident in 5 years their company will be more than $1 billion. You meet any founder, I'm sure. But it has to be balanced. So today's theme, considering valuation about science, storytelling, and strategy. The initial setup which I want to make for everyone is that valuation intermediary, we chartered accountants, merchant bankers, registered valuers, are the one who can balance both numbers as well as story people. So are you with me, guys? Still here or sleeping or after having a good food? Okay, I can hear at least some yes. Okay, what is science in valuation? So science, basic thing, if I talk about science gives us some formula, scientific formula, which can validate certain things, like simple how to calculate speed, how to calculate velocity. Science gives us a tool. Science gives us a tool under which you have your own framework. In the same way, in the valuation, we know all these approaches. Discounted cash flow, this is one of the technique. Another technique is market comparables. In the startup industry, this VC Burkus method is a prevalent method of valuation. But can science or these numbers can help in doing the valuation? This is the question. Yes or no? Only the numbers can help to give the outcome what we are looking for today is the valuation. No. Why? There are few challenges associated with startups. If it's an early startup, either they are not making any revenue. Even if they are making revenue, they are burning loss or they are burning cash. Most of the startups which we see today is like they are unique in their ideas. It is not difficult to find comparables. So all these methods cannot independently evaluate or value the startups. So this gives us a conclusion, or this gives an insight that when the numbers are not that trustworthy, when the numbers we are not confident, then the storytelling part becomes more important in comparison with the numbers. So what I'm trying to say here is numbers, science, storytelling, all are integral part of valuation, but in startup, along with science, numbers, storytelling is the major key, because you are doing something new. Because of that, you have very limited historical information available. Okay, so let's take an example here. Is it difficult to value company like Procter and Gamble or Nestle? Is it difficult? No, because we know it exists. We know their valuation drivers. What is their past growth? What are they expecting? It is difficult? No, it is not difficult. But a recently listed company, Grow, stockbroking company Grow, is it difficult to value that company? Yes. Simple reason is that, sorry? So their peers are, let's say, are at 20 ka PE ka multiple, they are at listing at 40 ka PE ka multiple. So when others are getting 20, simple example, my neighborhood flat is getting sold at, let's say, 1 CR, I am asking 2 CR. Because Grow is at 40 ka PE multiple, whereas other brokers are at 20 ka PE multiple. Is it justified? Are you willing to pay that kind of valuation for same set of work? No, I'm not going to give. But people are giving it. They are getting oversubscribed. Even after listing, it jumped 40%. Why? Because people think that the numbers which they have delivered is the past. The major growth is going to come in future. The future can be through increase in their user base, increase in more in market share, in entering into new field around wealth advisory, mutual fund. So people are more confident. Yes, this company is going to deliver more. That's why in startups, numbers alone cannot price them. So on science, we all know about these methods, so not taking too much into that. Now, what is the strategy? When you are doing a valuation of a startup, strategy is the most important part, because it is the way you will execute. Now let's look at some factors which will drive the valuation, strategic factors. Because as a valuer, as an evaluator of a company, we need to balance the number as well as the fairy tale stories. And this strategy is going to help us. How can we balance the two? So first pillar or the first factor is market size strategy. What is going to be my TAM, SAM and SOM? TAM is my total addressable market. Let's say I am into online advertising business. So what is going to be my total addressable market? How much market is there today? Let's assume I am going to capture 100%. I have all the resources to capture it. What is the total worth? Let's say 1 billion. Out of that, SAM, service addressable market. Out of that 1 billion, realistically, how much I can capture, considering my resources as on today. So it's a subset of TAM. SOM, service obtainable market. It is again a subset of SAM, which today, realistically, again, I can achieve. So this helps in evaluating any valuation, what is going to be the total market size of the particular industry. Okay, second, the most interesting words any VC, any PE fund would like to hear. What is your business model? We generally know manufacturing industries are capital intensive. They need capital for their setups. But in today's world, when we do see valuation, they are asset light, subscription based, marketplace, which carry different revenue expression trajectories and risk profiles. Asset light, have we heard about Uber? Uber is not owning any car. It is asset light model. Subscription based, Netflix, Jio Hotstar, they are subscription based. Third, marketplace, Flipkart, Amazon. These all the new, you can say new areas which is explored in the valuation, in the startup world. Third, once you have decided sector under which you are going to operate, what is the total address size, what is your business model. Now third, go to market strategy. How are you going to acquire your customer? You have identified your market, you have identified your customers, you have identified how are you going to pitch them, but the third important, how are you going to acquire? What is going to be their cost of acquisition? Flipkart, or I will say Zepto, they are still acquiring customers. Swiggy, Zomato, they are still acquiring customers in a different way. Everyone has their own approach. Once the customers are acquired, how will you scale it? Acquiring 10 customers is fine. Acquiring or delivering a service by an e-commerce company in a particular pin code is fine. But how will you scale it to all India level or at a state level? That is the important strategy. Okay, these are the unit economic strategy. These are the some metrics which company or VC would like to get a hold on it, like CAC, customer acquisition cost. LTV value, we are well aware what is the lifetime value of a customer. If a customer comes today, how much revenue I can generate from that customer? What is the gross margin? In the recent years when startups started listing, we have heard a new concept of called adjusted EBITDA. Have you heard about this concept? So these, or before that, before the listing, we heard about a new concept called as GMV. GMV, gross merchandise value. So Flipkart or the Amazon are the ones who innovated these ideas. They got valuation on those metrics. Adjusted EBITDA is used in the listed space just to show them that yes, we are profitable, but we are into loss because of some non-cash expenditures like ESOP expenditure. So this is the way of presentation. This is the way of storytelling. Why I'm using these terms? These all are storytelling. If you see their bottom line, they are still into losses. But if you look at their adjusted EBITDA, they are profitable. They are doing wonders. So these strategic factors are the one which drives the valuation. Okay, we can skip this. Okay. Now coming to the most important part in startup valuation. Science, we discussed, these are these tools, scientific ways where you can do the valuation, but in startups, numbers are not that sufficient. Second part was strategy. Strategy we discussed is a bridge between the storytelling part and the numbers. Now coming to the storytelling part, we as a chartered accountant, when we look at the balance sheet, what does it say? I call it as an accounting balance sheet. What does it say? It shows some numbers on the asset sides, like current assets, then you have a fixed assets. On the liability side, you have some current liabilities or long-term liabilities like bank loans, something like that. What is left? Assets minus liabilities is the capital, shareholders fund. And what does this shareholder fund denotes? Shareholder fund is nothing, just from the day the company is incorporated, whatever action company has taken, it is quantified in those numbers. Is it fair? Shareholder is like that. As an accountant, can I value based on these numbers? Can I value? I have to do book valuation. But is it the correct value? People are ready to pay? Maybe not. Because as an accountant, we are restricted to give what is recorded in the financial statement. There is another concept called financial statement, in which only there are two levers. One, assets in place, and second, growth assets. Assets in place, as the term defined, whatever assets today you have, through which you have generated your revenues till date. Second, I talked about growth assets. Growth assets are those assets from where your future earning will come, your potential earning will come. These two aspects will help you in doing the valuation, will help you in making the storytelling better. Okay. When Swiggy and Zomato got listed, I want to hear people's views. My personal view is that now this space is going to be served by only these two people, Swiggy and Zomato, and no player can enter into this space because they are heavily funded, they have a good network, they have already restaurants onboarded. Do you think anyone can enter into this space? Yes or no? So I would like to hear the reasons why. Okay, one more I think I wanted to tell you, because these people are heavily funded. Will anyone, if anyone wants to enter into this field, they need funds. Will anyone invest? Because they have to fight with heavily funded Zomato or Swiggy. So as an investor, will you invest any new startup which is doing similar business? Yes or no? No? So it's a kind of duopoly kind of business, heavily funded, they have all the resources, they are fighting with each other. But recently I have read an article where Rapido has entered into similar business. Has anyone read that article? Rapido, I think everyone is aware. They are into no? They are like Uber, Ola. So they have entered into this space, even they got the funding. What could be the reason? Because as a general person in the public, I know there are two big players whom I need to fight, and any new player need intensive capital, huge amount of capital. Still Rapido entered, PE and VC fund has given money. What could be the reason? Their existing business might give some leverage, but it doesn't mean that they should enter into this business. So there must be, so ultimate conclusion is there must be some storytelling by the founders that they can also enter into the business, capture the market and serves better than Zomato and Swiggy. So how powerful a storytelling is. You can do wonders, but like sir has mentioned that they are already into logistic business, correct? So that storytelling is supported by the existing business data, which is an integral part when you do a storytelling. Okay, so in this why storytelling matters, only last line I would like to read, which is said by Warren Buffett. If you can't tell your story, you don't understand your business. So a person like him is emphasizing on storytelling part. Because through storytelling, you communicate to the world what you want to do, how will you do, where will you do, and how are you going to achieve it. That's why storytelling is a very important part in startup valuation. Simple reason is that you are doing something unique, which is backed by only limited data. You don't have that sufficient data. So I'm focusing more on storytelling. Reason is that we chartered accountants are good in numbers, but somehow we miss the storytelling part. If you sit with any promoter, not I'm saying founders, the way promoter thinks versus the way we think is, I believe, completely different. We try to put everything in numbers, but what they see is vision of next 5 years. How will I grow my company? What actions I need to take today so that I can achieve those in next 5 years or 10 years or 15 years down the line. So if you have that story, it turns into action in future, and that action leads to numbers. Sorry? Yeah, result, action, result, desired outcome. So this particular slide I have prepared with the help of few founders. I have asked them what a VC fund or PE fund looks when they go for pitching to them. Because I see founders today are younger than me. I am 36-year-old, but I have a client who is at the age of 22, 23, and VC and PE fund are funding them. Why? And they don't have anything, they just have an idea, but they are so much confident. Why? The reason is here, a valuation story consists of vision, traction, credibility, and future potential. It answers certain whys. Why do you want to this startup? What problem are you looking to solve? When Zepto came, 10 minutes delivery. How many of us are using Zepto? I'm using. Okay. Rest are sleeping, no problem. So when Zepto came, I was like, किसको चाहिए 10 मिनट में डिलीवरी? हम जाएंगे, नीचे जाएंगे, लेके आ जाएंगे. ये मेरा पर्सनल परसेप्शन था. But Zepto has done wonders. It forced other e-commerce entities to come into this field. What he has done, in one line, I generally say Zepto ने इंसानों का जो आलस था ना, उसको कैपिटलाइज किया है. अब कौन उठ के जाएगा, लाएगा, आ जाएगा घर पे? ये मैंने नहीं सोचा था. ये बिहेवियरल शिफ्ट है. दिस इज अ बिहेवियरल, ह्यूमन बिहेवियरल शिफ्ट, जो मैंने नहीं सोचा था. अब मुझे प्रिंट आउट भी देना होता है, घर पे बैठा हूँ तो मैं ज़ेप्टो को ईमेल करता हूँ, वो बकायदा 10 मिनट में मेरे को प्रिंट आउट ला के देता है, एकदम सील्ड एनवलप में, कॉन्फिडेंशियल. इतना तो मेरा ऑफिस बॉय भी नहीं करता है. तो सी द लेवल ऑफ सर्विसेज दे आर गिविंग, एक्सपीरियंस. सो व्हाई दिस स्टार्टअप? व्हाट प्रॉब्लम यू आर लुकिंग टू सॉल्व? व्हाई नाउ? अभी क्यों? Someone might have tried earlier, but they were not successful. Someone might have not tried till date in the way you want to solve. Simple example is, we used to have real estate brokers. जब मुझे फ्लैट चाहिए था after passing CA, I want to go on take a rent on, तो I used to roam with 5-6 brokers. After that, new age tech companies have come where you list your flat, you can see photos and all. So it is the advancement. So why now? So it depends in which field you are. Is it the right time to do this? Whether the technology supports, whether the human spending capacity supports. That's it. Why this team? Okay, why me? When I am pitching founder, why VC fund will invest me, not on any other team? Because that idea might have come to other people also. What they see in me versus others. Credibility. Maybe my past experience, how I did my articleship. Maybe past experience, how I active was. Maybe. Why this market? Okay, let's take an example here. One company who is doing a revenue of, let's say, 50 crore, but that company is now stagnant because there is no more market opportunities available to expand. Will you be ready to invest in those companies, or will you be ready to give a valuation to that company which is not growing? Because that is almost now, they have captured the market, or there is no more room available. Will you be ready to invest? My answer is no, because no future growth. Whereas I have a startup who is doing 1 crore revenue today, but it has a path to reach to 100 crores. I will be ready to readily invest, because I know from 1 to 100 he knows how to reach. So what is the addressable opportunity and what is the strategy to reach out? If you have these clear visibility, your story, your valuation story is going to play a very important role, and you know what you are doing. And in the end, I will say your investor might be saying, yes, I want to bet on you. Achha, how many of us are investing in startups? Okay, sir. What factors do you see when you invest? Because startups, again, new young people. Sorry, sir? Potential, okay. Sir, any other factor? Sorry? Founder's vision to grow. So, apart from founder vision, what sir has said, I also invest in startups. I see how good is the team. चलो मैं खाली उसको एक ही चीज़ देखता हूँ कि अगर वो इंसान ने ये बिजनेस चलाया नहीं चलाया, लेकिन वो आदमी अच्छा है ना, क्रेडिबल है ना, ये नहीं चलाया लेकिन कोई दूसरा बिजनेस तो चला ही देगा वो. So this way, like these all factors are correct factors. I will say that everyone evaluates, and the same is captured somehow in these slides. A different way of presenting my earlier site, crafting a startup story. Why, what, where, how, this we can skip. Okay. So when we deliver a storytelling, it has certain elements, and each element will either add to your valuation or will have impact on your valuation. When you discuss about market opportunity, what is my TAM, SAM, SOM, it gives an idea to the investor that what is the size of this market, how big is this market. E-commerce, if I take, it is going big and big and big every year. Second is a founder vision. How good is the vision of founder? It gives confidence to your investor. Yes, this person can do something. या इससे तो कुछ भी नहीं हो पाएगा. ये फील आ जाता है हमारे को, कहीं ना कहीं हम किसी से बात करते हैं तो. Product market fit. If your product is market fit, it means you have developed some kind of product, you have rolled out in a limited number of people, a limited subset of the people, and if you are getting reaction, you are getting feedback, you are getting responses, people are using it, you call it customer validation and retention. So if a people is using it again and again, yes, it means the customer is getting retained. Or if the person is just downloading it and not using it, it means your product is not that market fit. You need to work more to get it product fit market. Financial discipline, part 2, profitability. Okay, in the early stage, startups generally look to burn, because either they want to build product, they want to capture market. So their vision in the initial days is to not profitability, but increase their audience, increase their customer size, ultimately which will help in monetizing them, which will help in, you can say, part 2, profitability. Competitive mode, okay. Generally a question is asked, what unique you are building which others cannot build? ऐसा क्या यूनिक बना रहे हो आप जो दूसरे नहीं बना सकते? Why you? ये एक जनरल क्वेश्चन है, ये तो मैं भी बना लूंगा। वो अमन कौन है? वो अमन गुप्ता, सी अमन गुप्ता, राइट? आपने वो देखा होगा शार्क टैंक में, ये तो हम भी बना लेंगे। उनका एक डायलॉग फेमस है, करेक्ट? तो योर प्रोडक्ट शुड बी बिल्ड इन अ सच अ वे दैट इट इज डिफेंसिबल. Someone cannot copy it. Even if they copy, they can't give the same experience, or they can't give the same deliverable what you are giving. Growth trajectory. Okay, my best part. If you're, let's take an example of Paytm. Paytm was started as an, I think, payment collection. People used to wallet transfer. That was the initial use case. But slowly they expanded into various other things. It can be ticket booking, it can be your utility payments. Today they are disbursing loans based on the data they have about us. So what are the future potential avenues? So all these elements, when you tell your story, gives lot of weightage to valuation, because today what you are saying ultimately is going to have impact. Ultimately in future days, what is the actual result? These all are going to impact a lot. Okay, let's take some very few examples about the Indian startup valuation. I think everyone has heard about these names. So I just tried to cover some positive, negative case studies here. CRAD. How many of our CRAD users? Okay, quite a few. CRAD started with a simple feature: pay your credit card bills. Why he has done that? Credit card bill today, earlier also you used to pay directly going on the bank website or through net banking and all. But why CRAD has just thought, okay, just making another channel of payment. And he got valued at $6.4 billion. Just because we have started paying payments. Our own credit card, our own expenditure. सब कुछ हमारा है, वैल्यूएशन वो लेके चले गए. क्या रीजन है? So his narrative was very simple. I am building a community of high net worth individuals who are having a CIBIL score of 700, 750 plus. And when this community comes together, they can do wonders. Because you are making credit card payment, and credit card is given to a decent net worth individual who is having a CIBIL score of 700. So he identified some spot in the top elite class of Indian population that, okay, if they come together, they can do wonders. Okay, how? They will cross-sell their products. They will give loan to you. They will give you some other offers. They will give you more flexibility. They will give you more, you can say, features around payments. Only with the top 1 or 2% population of India. And on this storytelling, he has been valued at 6.4 billion. So how powerful a storytelling is. Though there is correction in the valuation in recent days, but still. Zomato, I think it is favorite of many of us who has invested in Zomato in IPO. It has tripled till now from the IPO price. Their simple mantra was, they want to change how India eats. Earlier we used to either go to restaurants, either we used to deliver from the nearest, get delivery from the nearest restaurants. They have changed the entire landscape. Earlier, if you remember, they used to give us Zomato Gold. One-on-one offer. Everyone was very happy. But they were not. So they changed their narratives and they came into this delivery service. So one thing, if you see about Zomato, they are commanding a premium valuation in the market today because they have executed very well, because the story which they delivered in the initial phase is now achieved. or they are on the trajectory to achieve it. So whatever they have told, they are delivering it. But if you see their IPO prospectus, okay, so they had given some figures of average order value, how much order value they are doing, how much users they have, and based on these numbers, our own financial influencers started saying that even entire India gives order, Zomato will not be profitable entity. If you remember, guys, like these were the narratives which were there before the IPO. But he proved everyone wrong. He delivered better. And today the valuation is triple of the IPO price. Even when people were not satisfied at what price IPO came. Paytm. I like the music. I like the music very much. Paytm karo. And in demonetization, everyone was doing Paytm. Even a temple has Paytm account. Ideally, it used to do wonders because everyone was having this QR code and all. But somehow story didn't go well. India started with its own UPI, which has given tough competition to this wallet business. The story or the vision which was shown by the founder somehow not achieved, and which is reflected in its today's share price. So we have one example, Zomato, which has delivered what he has said. Market has appreciated it. Market has given weightage to it. Whereas we have another set of investors who didn't like, because Zomato, Paytm didn't deliver, and we know the price today. Nykaa, okay. Has everyone heard about Nykaa? Nykaa. It's into beauty segment. And I would like to specially ask our female audience what they like about Nykaa as a user. Anyone would like to give answer to it? No. Okay. But from as a valuation perspective, what I have found in Nykaa is they have in-depth catalog. The number of products they give, the options, the number of options which they give, the other beauty segment is not able to deliver. It has impacted the stickiness, you can say retention of a user. With this narrative, along with beauty-centric and other things, Nykaa has done wonders. Zerodha, I think everyone is aware about it. I don't need to tell much about what their business and do. They are profitable, they are bootstrapped. Only thing I would like to say, they have kept themselves very low. What they have told, they have achieved it. Though they are not into public segment, but somehow their private valuation is very, very, I will say decent, not high, very decent, based on their numbers. Okay, I think everyone must have used Oyo in their lifetime. This is the world largest hotel without owning a single hotel. Can you imagine? World largest hotel without owning a single hotel. See the vision of the founder. He has executed very well. He has reached to the valuation of $10 billion, but somehow the business didn't do well up to the expectation, which helps in maintaining that valuation. So today's valuation is reduced. But what we want to say is that if the story outgrows the business fundamentals, if the story which you are telling is not getting supported by the fundamentals, ultimately valuation will drop. So these all are real life case practical examples. Byju's, hot darling of Indian startup ecosystem. Byju's में एक ऐसा टाइम आया था, आज एक इन्वेस्टर इन्वेस्ट कर रहा है तो कल दूसरा इन्वेस्टर इन्वेस्ट कर रहा है और कल तीसरा इन्वेस्टर इन्वेस्ट कर रहा है. This was in 2020 जब कोविड आया. So और in world के renowned investors have invested into Byju's. क्या रीजन था उस टाइम? कुछ तो थीसिस होगी किसी ना किसी का कि yes, this will do wonders. So during COVID, what happened? Everyone went online. Everyone thought that this human behavior will continue. These edtechs will continue to survive. People will keep spending, students will keep spending time on these edtechs. Because of that, in the early days of COVID, they got huge high valuation. I think their P or revenue multiple, I think revenue multiple was 40,000. In their early days of valuation, their revenue multiple was 40,000 because they were telling the story that they will keep continue to grow in that such rapid space. But what happened after COVID lockdown gets over? Human behavior again shifted. Parents started sending their kids to schools. Everyone realized school teaching is the best. The growth in the number of users, students started dropping, which ultimately led to reduction in their revenue, which ultimately led to reduction, or I will say drastic fall in the valuation of Byju's. So they also, like till now, they are also facing some governance issues. Some $500 million debt or money has been parked somewhere, and they are still. So what we are trying to again say is that what happened in Oyo story, this has happened here, that story should not outgrow your fundamentals. At the same time, integrity, credibility is also an important factor in valuation. So after all these, I know we have dealt very less on science and strategy, but more on storytelling. Because in startup world, storytelling is the, I will say, most important pillar, which is backed by strategy, which is backed by which is backed by numbers. So what I want to give some key takeaways based on our discussion till now. Storytelling gives soul to valuation. Numbers, yes, is there, but storytelling narratives are important because it communicates what you want to achieve in your future. Story plus numbers. When your story is backed by numbers, investor gets confidence. Third, every valuation express beliefs. Okay, this is an important thing from concept point of view is when you invest in a company, you are investing on the belief. Yes, this company can do this and that. You are not investing on the numbers. You are investing on the confidence. You are investing on the founders. You are investing on the future, what is being told by the founders. So it is a belief. You are buying a belief ultimately in the valuation field. Okay. The valuation trinity framework, when these three comes together, what happens? Science gives credibility, strategy gives direction, and storytelling gives meaning. So I was reading at one of the article on this. If you remove any of the three components among these three, it is going to impact your valuation. So what I read in that article is, if you remove science from strategy and storytelling, the story becomes fantasy because it is not driven by data, it is not driven by numbers. If you remove strategy, the story becomes confusing because you are directionless. How will you achieve that goal? And if you remove story, the important pillar from these three, with only science and strategy, what will happen? Then, like I told you, storytelling is a soul. So your valuation become lifeless if you remove storytelling from it. So this is wonderful thing I have read from the article. But when all these three things aligns, but when all these three things align, in my personal opinion, you can be a very good valuer. You are a very good, maybe you can say, storyteller come entrepreneur if you have some vision, if you have some passion to do something, and if you want to raise funds, if you want to do valuation. So these three factors are the ultimate things which is required in valuation. Okay, now what could be our role? We are valuer, we have been authorized by regulators to do the valuation. When a client comes to us, what things we should look as a chartered accountant? So few checklists, few things we which need to see is, does the story match the numbers? Let me give you one example here. One client came and he told me that in 5 years I will do $10 billion revenue. Well, fine, you can do it, no problem. But I asked him, what is your total addressable market? That is 100% market, even if you capture, what is your? He is like, as on today it is developing, and 5 years down the line it will be $8 billion. Okay, so market you are expecting to reach at 8 billion, but you will make revenue of $10 billion. So that numbers is not getting justified. So as a chartered accountant, we need to put few checks. One is, does the story matches the numbers? Are assumptions consistent across decks or across the projection sheets? Are projection realistic? Okay, third point, in startups especially, I am not always convinced that these projections will be realized or realistic. Somehow I need to take faith, or I need to keep faith on the founders. Yes, they will be able to do it because there is no past history. Governance signals, any red flags? Founder decision making pattern. Okay, so founder decision making pattern here, if founder is raising funds, here in the initial round of funding, he mentioned that he will do XYZ business. In the next round, he made a story of I will do ABC business. In the third round, he made a story of DEF business. Is this consistent or not? No. I think when there is so much change in the narrative, I believe giving a valuation to that changing narrative is very difficult, because you are again starting from zero. Whereas you have a real case example of Amazon. Jeff Bezos, Amazon, I think everyone knows, they are into loss. They were into losses for 20 years. Anyone aware about that? 20 years, even after listing. But Jeff Bezos' narrative was always like this: we will do this business, we will capture the market, and one day we will start earning profits. So his narrative was very clear from day one, and for 20 years he kept saying same narratives. I will expand my customer base, I will lose money initially, but one day I will start making profit. And market has rewarded it, ultimately. Is market size inflated? Again, TAM wala thing. Are cohorts growing the way the story claims? Cohorts can be the subsets of his numbers, like let's say my growth rate in revenue will be 10% month on month. My cost will increase by 5% month on month. So are these matching what he is saying? So these are the few things we can take care, apart from those scientific things while doing the valuation. So I would like to summarize here. Okay, I will not go further here from here. So in the startup world, whoever tells the most believable story wins. Let your number speaks, but let your story inspire belief. What is most important here is that storytelling is most important part in the startup world. Whereas if you are not into startup world, where you are into this secondary market of stock exchange where historical data is there, storytelling again is important, but it might be having equal weightage along with the numbers, along with the strategy. But in startup world, storytelling has the most important weightage. This I will skip. Do's and don'ts in startup is okay. If you want to read something about why storytelling in valuation is important, there are few books or articles which are available why storytelling or numbers go hand in hand, or why they are equally important in any valuation. So these are by different people, but these all are well recognized global leaders in valuation. And one of them is Aswath Damodaran, who we call it, I personally call it as a father of valuation. He is a, again, Indian citizen, I don't know Indian citizen, but Indian, but teaches valuation in New York University, NYU. So we, as a valuer, like what generally we say that if he says something, it means a lot to us. So with this, I will not take much time. I will not make you more sleepy. I hope you enjoyed the session, and if you have any questions, I am happy to take up those questions. Thank you very much.